And so I think there are two big lessons that any investor can take away from what Burry is buying and selling today. The first is how Burry uses something called the barbell strategy, where you combine a high risk, high reward investment with a lower risk investment for stability, essentially cutting out the middle risk parts and just going for the extremes on risk, like Burry is doing by pairing his short-term, highly risky bets with the cash and likely bonds that he is holding on the sidelines. Now, this barbell strategy comes from derivatives trader and statistician Nassim Taleb, who showed this strategy works to better protect investors against unexpected events. And it's one of the ways that he, like Michael Burry, actually profited during the 2008 market collapse. It's a really interesting technique, and you could spend hours going into it with Taleb's books, but here's how you can use the barbell strategy to prepare for both a market crash or just a more volatile market going forward. So what I personally do is put most of my money into a lower risk passive index fund in my retirement account, with a smaller amount going into higher risk, higher reward, smaller stocks and emerging technology. Not betting everything on risky stocks, but also not being too scared to invest your money in the market and make sure it is working for you. But the second lesson that I think investors can take away is even easier to implement. So there's been plenty of talk about a coming market crash, especially as we continue to see the S&P 500 hit new all-time highs every month. But what Burry has shown us is even if certain parts of the market are overvalued, you can still find deals in other parts of the market. But while those stocks have been grabbing headlines, there are a lot of boring companies that have continued to build their brands, print cash, all while their stock prices are down due to emotional selling. And these are the opportunities that we can look for, where there's a disconnect between the value of the company and the emotional trading around it. There are still deals out there. So stay disciplined, stay patient, and look at areas where conventional wisdom is betting against the market. And then maybe we can make profits just like Michael Burry.